Today, we're going to be talking about Bitcoin. That's right, you heard me, Bitcoin. Good day, traders. I'm Stacey Burke from Stacey Burke Trading, and today we're going to be talking about Bitcoin. I received a ton of emails the last couple weeks. Bitcoin, Bitcoin, Bitcoin. What do we think about Bitcoin? Today we're going to talk about some things that I have not seen anywhere else on the net, anywhere, about Bitcoin. We're going to review our basic 12 candle window system, really simple model. 12 candles being the 3-hour window in the timing window. We're going to answer some questions regarding that as well, but 15-minute charts. Asia, London, New York being the peak volume times when those markets open, and markets tend to explode in that opening session of lots of volatility. We're going to look at the timing window for Asia, 8 to 11 p.m., 2 to 5 a.m., 8 to 11 p.m., New York Eastern Standard Time. I don't typically trade the close of the New York session in that 3 to 5 p.m. New York time window, but we will look at that with Bitcoin because obviously being in the southern hemisphere, it's nighttime, but in the northern hemisphere and in other parts of the world, people are actively trading that. But Bitcoin tends to trade 24 hours a day, and with some brokers, you can trade it on the weekends, and some of this, depending on who you're trading with, your platform, etc., the spreads may vary. But in our 12 candle system, I focus in that 12 candle window, those 15-minute charts, gold, the pound, the US dollar crosses mainly, but my emphasis typically is on gold. But Bitcoin has come up in the last couple months. Obviously, with the amount of movement and everything else that's gone on, Bitcoin was the rage. And now, obviously, it's consolidated somewhat between 50 and 60,000. Obviously, at some point, it was, way down there. We've had some massive runs, lots of speculation on where it could go. But I'm going to share some of my thoughts regarding it as a normal tradable instrument, using round numbers, engulfments, pin hammers, and understanding stop hunts. So in our 12 candle window, typically those are the peak sessions for Asia in the southern hemisphere. The market tends to swell in that opening Asian session. They set a high and a low. The market will shift or trend in one direction. Then we head into the London session. We may see a stop hunt back into the Asian session. So obviously, if you're in profits, the concept I want people to understand, if you're new to the channel, is that nobody gets a free lunch. So typically, if it was just as easy as buying Bitcoin and it's going to go to 100,000 next month, then everybody would buy Bitcoin. But we know that if you've bought Bitcoin, it goes up and down throughout the day, as any market does. We can call that an efficient market system. We can call that liquidity hunting, whatever you want to call it. But all I know is that when there's profitable traders in the market tends to go back and revisit those levels. And that does a couple of things. It either stops them out with a loss or stops them out at break even. And then the market will return and go back in the other direction and do the same thing. So even in a massively bullish market like Bitcoin, where your bias is completely bullish, it doesn't matter where you get in, there's still risk involved. So again, understanding that even if you buy it now at 52,000, to double your money, it needs to go to 104,000. When we know back in March of 2020, people who bought Tesla made 10 times the return on their money, 10 times. To get 10 times your money on Bitcoin, it now needs to go to 500,000, and it may go there. But the question is how long will it take? When will it get there? And will you be on board? So like any other 10-bagger or 100-bagger for that matter, lots of instruments have that potential. Now, will Bitcoin get there? There's lots of speculation. I don't know. But as a tradable instrument, for me, looking and going to the screen, if I was to trade that, I need to know, obviously, my spreads. I need to know my margin in terms of what I would need to trade that instrument, depending on who you're trading with, unless you're just buying it and holding it. But my timing window tells me when I'm going to trade, tells me when my highest probability opportunities are going to be. And again, understanding that there are trades outside of these windows, some great trades in the gap times, but typically I will only look at those if they are at the high or low of the day. So again, I've just not written that in there, but we'll talk about the high of day and low of day. And that can be for the session as well. I look for these markets to trade off of round numbers. Double zeros, 50s, 25, and 75. Engulfments and pin hammers are what tells me they have locked in the high or the low for a move back in the other direction. So understanding the stop hunt. So once they lock in a level, the most highest probability place they're going to go back to is the most recent profitable trade. We're going to look at Bitcoin, but I want you to be able to understand that to all the people, the new people that are on this channel. Again, I don't trade Bitcoin, but the same principles apply. We're going to look at that, and we're going to see some exact same behaviors at the high and the low of the day, at round numbers, quarter levels for extended stop hunts or for trapping volume, engulfments and pin hammers for locking in highs or lows, and stop hunts back into profitable trades. We'll look at the sweet spots indicator, which is a free download below. If you're using MT4 or MT5, that gives you your round numbers. We'll go over the inputs that I use for those charts, and also the I sessions indicator. If you want to put your timing windows on there, it's up to you. It doesn't really matter. Let's take a look. And again, thanks for a ton of great feedback. A lot of traders yesterday. The pound, we saw some big movement on a couple of the pound crosses. Gold obviously had a massive stop hunt in the US session in both directions. Tons of volatility. These principles apply on every type of market. They have a high and a low. They use numbers to trade from. We have our peak volume, time window, engulfments and pin hammers, and stop hunts. Those principles are across the board in anything that you trade. You can apply this. I can narrow my window down to a certain focus time, 3-hour window, to keep it simple. Let's take a look at the charts. Have a great trading session. Give me some feedback below. If you found some value, if you're trading Bitcoin or what instruments you are trading, just pop it in the comment section below. And again, if there's any other types of things you want to look at, I've had a lot of traders ask about looking at index funds, investing and trading on longer term instruments. We're going to expand and look at some of the same principles, obviously not the timing window, but I'm going to look at sharing some of what I look at for the longer term trade setups that I would take for position trading in the markets. Have a great weekend. Stay disciplined, stay focused. Let's look at the Bitcoin charts, and may the markets go with you.
So we're looking at the daily chart of Bitcoin, and obviously we can see where the last few years we've seen just normal bullish market and trends, and then we saw the correction back in 2019, and then the market again resumed its uptrend, and we are currently sitting between that 60 and 50,000 level. So if we randomly scroll through, it doesn't matter where. Obviously we've been in a huge bullish run. On my charts I have the I sessions indicator, which again is a free download in the description box below. I have this set for my timing window. I know that traders have told me that the FTSE doesn't open until an hour later and all this sort of stuff, but I follow the New York time window. I haven't changed it. The algorithm still seems to move and trade at the exact same times on New York time, whether the FTSE's open or not. So these are my settings in the I sessions indicator. And again, you can just download that and program it if you want this on your chart. My sweet spots indicator is the round numbers. If you're using some other platform, TradingView, whatever, I'm not sure how to help you. There are people who have mentioned that are number levels available to put into the TradingView. But again, my settings for the Bitcoin sweet spots, 25,000, 10,000 for my levels, 100 just normal lines above and below. You can color it however you want. But talking today about the 12 candle window, the 3-hour window time frames that we just looked at on the whiteboard, and understanding that even in a massively bullish market, that the market will still be volatile, trading back and forth, hitting stops, stopping out people who are in profit, or forcing you to go into drawdown if you're just buying and holding. And again, the timing window, if you're trading this, this allows me to focus at certain times. It's not going to be the same every single day, but looking for ideal trading setups, but emphasizing that the market moves in the timing windows, moves off of numbers, engulfments and pin hammers, locking in highs and lows. These behaviors are universal, regardless of the instrument. Now that this is being traded on an open market, human behavior will still imprint into the price charts, whether they're electronically driven behaviors by artificial intelligence or quants or algos is irrelevant. Markets can only do three things. They will break out and trend, break out, pull back and trend, break out, pull back and reverse, false break reversals, or stay range bound in a trading range. And so the pink line represents the beginning of the week, the Monday, and again, some platforms will have 7-day-a-week trading on Bitcoin. Now, this is not a session on, the blockchain technology, the limited supply, all these other things that are being discussed. This is merely just looking at the trading chart and the behaviors that are universal and repetitive on any instrument: high and low, timing window, round numbers, engulfments, pin hammers, stop hunts. So again, the same principles apply. People ask me all the time, will this work on the index? Will this work on a share price? Will this work on Bitcoin? Will this work on that instrument? Every instrument, if it has a high and a low, it definitely trades off numbers, and it has a high and a low. These same behaviors will be consistent throughout any chart or market. So again, if we look, we see that, again, the principle, the high bull is engulfed at the beginning of the Asian session. We get our M formation and engulfment. And again, coming off of the middle of that 00 range. So this is roughly almost a 300 pip box. If we call them pips for Bitcoin, we can call them increments, pips, whatever, point movements. But this market engulfs, makes our M structure at the high of the beginning of the session, moving down before consolidating, pulling back, and again taking out the low of the Asian session into our Europe-London 12-candle window, at which point we get the 1 push, 2 push, 3 push, 3-bar reversal engulfment for our W formation. So again, timing window, Asia puts in the high, London puts in the low, and New York continues inside of that range. Again, if this is a really strong bull market at this stage, we're in March. If it's still in a bullish situation, even though it's consolidated, the move off the bottom was a continuation move, but we see again the pin down is a stop hunt into traders who are in at the beginning of the session, which is why if you're trading this, understanding when and where you want to be taking profits on certain types of setups, locking it in, taking it off the table, because they will come back and make sure that they get you. And you can see, obviously, they got the trader who was short in Asia, and they got the traders who were short in the gap time into the Europe-London Open. They pin down and get traders who are long at the open of the U.S. session, and then they continue their move into the end of the close of the day. Blue line represents the previous day's highs and lows. So again, we broke out of Friday's high, layered on top, and continued. The next day, we do the same thing. We break through the previous day's high. We pull back. This is prior to our Asian 12-candle window, before continuing with a breakout pullback continuation for a trend trade into the Asian 3-hour window. Again, the 3-hour window typically will establish a high or low for that session. In this particular case, in the gap time, they extended that high out before pulling back into the Europe-London 12-candle window, which again, the higher level longs gets hit by stops, pins underneath, and you'll notice that market layered at the 50 level, the midpoint of the 00 box. So these solid lines are 00s. The larger hash in the middle is our 50 or our midpoint, and the dotted lines are our quarter levels. And again, they come back and trade up to the high, not quite taking out the high, but enough to stop out traders who were short. Again, staying inside, and then a 1, 2, 3 to the high stop hunt on traders that were short after the pullback into traders that were long in the Europe-London 12-candle window. So emphasizing again the same behaviors. Round numbers, high of day, low of day, stop hunts back into profitable trades, so back into a trend, hitting stops on late comers to the trends, hitting stops at the highs and lows before pulling back inside and continuing the move. So again, coming back to our basic template, we have day 1, day 2, day 3. They go vertical, blowing off through the high of the previous day, and then coming back with a vengeance, hitting all the stops on the higher level longs from the US, London, and Asian session in 1 push, 2 pushes, 3 pushes down. So again, 100, 200, 300 pip move, the 3 levels of drop before consolidating on that 3rd push inside of our middle leg, again giving us our W structure for forming our low of the day scenario, and then continuing again off of the 50 level for a move back up in the Europe-London window, hitting stops on traders that were short in Asia, pulling back on higher level longs, again pinning into those traders who were who are long, and again the pins are down to the halfway point, so we're in a 300 pip box roughly from high to low, and the market pulls back to the midpoint of that 150 pip level, pinning into traders that are long on the higher level longs before continuing their move through the high of the day. Again, just emphasizing round numbers, timing window, engulfments, pin hammers, high of day, low of day. And Bitcoin just is behaving so specifically in line with these principles. I don't trade this, but the same tactics apply on all the instruments. If I was to trade anything, the same tactics apply for me. The next day, we open up inside of a peak formation. They give us an M formation right off the bat. Middle structure, again off of double zeros at the high of day, low of day. They layer underneath of 50, pulling back and then stop hunting down the 1, 2, 3, 150 pip move, hitting stops on people who are long at the close of the U.S. session, as well as on the stop hunt down prior to the beginning of Asia. So they've put pins and levels, higher level longs into the close, and then an aggressive 1, 2, 3. So that impulsive, aggressive, fast move is the stop hunt into traders who are either in profit or caught in the wrong direction. And then we see the exact same thing coming back. Inside bar at the low after the stop hunt, the engulfment, and then the fast move back up, getting traders who were short at the beginning of the session. Market pulls back inside again. Again, you're just respecting the round numbers, high and low, hitting stops, pulling back, micro M structure within inside of that falling trend, and again the fast stop hunt down. So 1 push, 2 pushes, 3 pushes down, and a 4th for our W engulfment. So obviously we don't have that engulfment on this 3-bar reversal. This is a textbook pattern though, because as soon as that high is broken, this market's on its way. 1-bar stop, and then the fast move back through the high of the day, stop hunting back into traders that are long at the beginning of the US 12 candle window, hitting stops, and then continuing the move back up through not only the high of the day, but into the next double zero box. So again, just emphasizing high and low of the day, major round numbers, pin hammers, engulfments. So even the next day, just to demonstrate the importance of pins. High of the previous day, we got 4 pins above. They've pushed into that level, giving us a 3-push pattern into the peak before dropping down, and then a 1, 2, 3 into the Asian Open, hitting stops. Again, the creeping pattern where they're hitting stops, dropping into the next double zero box, hitting the double zeros, stop hunting back up, 1, 2, 3, and then the blow off move, pinning down to the double zeros in the micro W double bottom formation, and the pin hammer and the fast explosive move back up, hitting stops on traders that are short throughout that creeping trend down, and then again heading into the next week. So Bitcoin behaves the same as any other instrument, and as I mentioned to any trader, before I trade anything, I would be studying it and trading it and understanding the timings, the levels, its behavior. The same participants are going to be trading this going forward. Its behavior will probably be reproducible going forward. There's institutional involvement now in the market. It's being traded on exchanges, and so obviously there's bigger players involved, probably algos and quant systems running in this market, whatever. But for me, the same three most important components are the high of the day, the low of the day, the timing window, and the numbers. And obviously for highs and lows, I'm looking for engulfments where we lock in a high, lock in a low. Again, an example of any of this, if you're not sure, is take a look at a high and a low. And we have an engulfment in this particular day, an engulfment that potentially is locking in our low. They come back and work into the low, and then they come back a second time and work into the low again without taking it out. Now they take out the higher level longs that are caught in the middle, but again, this peak formation locks in our low of the day. This bull candle closes above the bear candle. They work back into it. They work back into it. They pin into the reversal before taking off. So understanding that once they lock in a low or a high, just same principle up top into the close. They gave us a peak formation high. They worked into it, dropped it down, worked into it a second time. And again, even though they've pinned up through that high, this was our peak formation high. And again, you'll notice that that was a stop hunt into the high bull peak formation from the 12 candle US window. Engulfments, pin hammers, and those patterns are reproducible, consistent, and will show up again and again and again, regardless of the instrument. Bitcoin, gold, the pound, Tesla, whatever, we'll see the same sorts of behaviors: stop hunts, reversals, trends, and range-bound markets. So hopefully you got value out of today's video, traders. Again, Bitcoin, lots of questions about it. Again, on the technology side and everything, it doesn't mean anything to me, but if I was trading this, I just would want to understand the spreads, the price action, the timing, if the spreads fluctuate at certain times of the day. If they don't, what your broker's platform's like. Does it allow weekend trading? All those sorts of things. If you're just holding on to it, then you're going to be subject possibly to gaps. Regardless if it's an up market or a down market, this is supposedly a really strong bullish market, but as we've saw in the last couple weeks, even in a strong bull market, we could see people who have possibly bought somewhere up here, and now even though Bitcoin's in a massive bull run, if they're late to the party, they may be underwater. So don't know where it's going to go, couldn't tell you, don't know much other than if I was to do anything with this market, I would treat it as any other instrument. And as you saw, I'd be looking at my timing window, high and low of the day. If I'm trading in position holding, same principles apply. I look at the high and low of the month, and we see that the market broke out. It pulled back, hitting stops on traders that got in at the breakout. They've gone up into March, hitting the highs of February, and pulled back, and potentially may have a bit of an M formation. This may not hold. It could be a false setup. We could see this market obviously revisit those highs, but currently we're back inside of the peak formation from February. And February, March, beginning of the month, the most recent swing low, we have stops around the 4,400 mark. So 44,000, sorry. So hopefully you got value from today's video, traders. Again, thanks for a ton of great feedback. Put your comments below if there's something you'd like to look at specifically. We'll take a look. And again, we'll look at some other types of trading scenarios that I use on longer time frames, possibly other instruments as well, as a lot of questions have come up about that. Have a great weekend, and may the markets go with you.
Hi traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburktrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High-Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.